Okay, I'll just give you a quick insight as to like now. Time is about 25 past. Getting about 27 minutes past 2. Now, I swing trade options in a practice account, but I treat it as if it's a real account because at some point I want to be a real swing options trader, a swing trader options. But I've done it in accounts. I've done the Bitcoin. I've traded Bitcoin. I've traded Forex. I've traded commodities, gold, and whatever. Yeah, in practice accounts. But I've done day trading. I've bought trades in 3 minutes and made a profit. I've bought trades during the same day. I've bought trades, kept them for weeks. I've kept trades open with for a month at a time, with no stop loss, and still made a profit. But I'll give you an insight as to basically how I do my day, how I plan out now. It's about 3:30 now. So although you had like pre-trading on the New York Stock, I just trade usually on the New York Stock Exchange, which is just open now. So this is UK time, which is 2:30, 14:30. New York Stock Exchange just open. Even though you've had like early trading or pre-trading before this, the main stock exchange is open now. But in my account, because I've got options, I've got open positions. So like now, I've got about 9 positions. I've been in some of them for about 3 weeks probably. So at some point, I'll be closing them in the next 7 days. Whatever. I don't really mind if they stay how they are. There's now 9, and they're in negative positions. So they're in. But I always check the FTSE, the FTSE in Google now, around about 20 to 3, 2:45. And Google gives you a live FTSE price, FTSE price, and it shows you what's happened in the last 6 hours. So you know what you're doing, the waters you're trading in, I suppose you want to call it that. Choppy waters in the sea. You're almost like looking at the sea, seeing if it's like calm or choppy waves or storm, whatever. Yeah. So I check the FTSE, because that's it. I'm in England, so it's been open for 6 hours, 6.5. It's been open since 8. It's been open for 6.5 hours. So it shows you it says 6.5 hours trading. The Dow Jones will appear in Google about 20 to 3. Well, just before that, but you get an idea about 2:45 what's going to happen, where it starts off at, whatever. Yeah, and then so even today, I'm not even going to trade. I've got no intention today of actually making a single purchase or a single sale of a trade, because I'm already in those trades. And you'll hear stock traders talk about it's gapped up or it's gapped down or whatever. Yeah, this is now, right now, is where you're going to find it. 8 o'clock in the morning in the UK Stock Exchange, London Stock Exchange, or now 2:30, and you'll realise where your balance is, because your balance will either go plummet like a stone, or it'll fly off the scale right to the moon. Right? No, you get what I'm trying to say. You'll either make money or you'll lose money, but you won't be able to get to it overnight. If you leave it with no stop loss, you just take what the market gives you. It can actually lose you a lot of dough, or it can make you a fortune. You just take that what it is, but to be in that situation, you have to have read you know the day before roughly how the market's going to work. Pretty much, you've got an idea. And because I'm from the New York Stock Exchange, it goes into Asian markets, and then it comes back into the UK, and then tomorrow afternoon it'll be back in New York after. So you've got a lot of things can go wrong in that time if you have got no stop loss. I purposely choose no stop loss, because sometimes your stop loss can stop you out of trades, which means that it can go below. It can go below. So the ceiling there is stop loss, and if you go to stop loss, it will stop you there, which means you won't be able to go up here and then go up here, because you've been stopped out here. And that's stop loss. So I don't use stop loss. I know the trades that I'm in, because I like tech, tech venture and all that sort of stuff, and I trade tech stock. So, and now about 20 to 4, 23, quarter 3, the options, so my balance will go from my balance at the moment, trading balance is about 130 grand. Trading, pretend money, but I've got my stocks, and it'll probably go down to it can get down to 110, I couldn't care, because I know roughly where it should be. I know I bought these stocks at about 119 grand, so they've made about 10 grand in a month. But they were at 292 grand a little while back. And I thought they ain't going to go down that far, and they'll come roughly back up again. They went from 292 to 130, well 119. But I don't mind that, because I know what stocks I've got, I know roughly what they're going to do, give or take. And they'll do, I don't care what, I'll take whatever the market gives me. If it gives me a loss, it gives me a loss. I've seen 100 grand budget double in a day, so I know what it can do. I've also seen 292 get to 119. So the stock market will do what it's got to do. But from the last recession, 2008, the stocks have broken all records. So they've come from the low of 2008, 2009 to where they've never been before. So the stock market, as much as yes, you can lose money, but you can make money. You just haven't got to panic. You won't make money. Well, I'm not saying you won't make money, but you need to be, but by losing, you need to be able to take a loss, financial loss, and not worry about it, and just let the stock market do what the stock market does, and it usually makes it up. But the problem is people panic. They take a heavy loss, financial loss. If your budget goes down 3 days in a row, let's just say your budget halves from 100 grand to 50 grand, and the next day it can halve from 50 grand to 25 grand. And the next day it can halve from 25 grand to 12.5 grand. But it's how you get back from the 12.5 grand without total despair, thinking you've lost virtually 80 odd percent of your balance. Forget that. Because as soon as you close your balance on a loss, you've effectively cut the swing, so the swing can't bounce back up. Yeah. You've effectively, I call it like the lift. You've got out of the lift, which means you can't. When the lift goes back up to the top floor, you can't get on it because you're out. You're not in the lift. That's why I let the market do what it does, so it just fluctuates like waves in the sea. Sometimes you get a big choppy wave, and sometimes it comes down. But your balance, whenever you look at your balance, it's just whenever you look at your balance. But they say trade without fear. Don't worry what the stock market does. Yes, this is not financial advice. This is just me having years of looking at a trading account. And in real money, I've seen balances double in 20 minutes. The stock market doesn't care what the balance is. It just either doubles it, adds 5%, 10%. But people now have got savings in banks and in building societies that are paying absolutely nothing at all. But they're scared to invest, say, 5% of their savings. And okay, so it is a chance, but it's a calculated risk. If you look into the stock market, there's enough people on YouTube that tell you how to do it and show you how to live trade. But they're panicking. People with savings, they're panicking because they daren't lose any of their money. But there are stop losses to put in place so you can protect your investment so you don't lose any money. You only lose what you're prepared to risk. And don't put anything in that you're not prepared to lose all. Which means if you're prepared to lose 5 grand, for example, I don't know what your budget is, it's not my business. But everyone's got an idea what they can, it may be 100 quid. But if you can afford to lose 100 pounds, but you play safe with the £100 with the stop losses, and you got a free. There's every stock market account has a free trading balance, which means you can actually have the trading balance, and Just it's like pretend money, monopoly money, and just buy and sell stocks, and you'll see how the stock market works and how easy it is to make money and lose money, and then you get an idea. I've had many years of this, but I just can't save for toffee, so I can't save for more. But that's why I put my domains there, so that at some point I might want to liquidate a domain so I can actually trade for real, which is all I want to do. Because trading for real, I'll probably work on it. Like now, I'm not going to buy any stock today, but I'll probably look at the stock market for an hour and a half. For me, in my personal opinion, I'm not saying this is general, but I like the open market open, which is an hour and a half-ish, about 4:10. The stock, for the first hour and a half, like now, the stock market is people closing their money from yesterday. They've made profit probably yesterday. They're closing it the first thing as soon as the market opens, taking the money out, putting probably a little bit less in, or whatever. Or they're putting the money in. They're going to be in for a day, out for day trading, or they're buying stocks. Swing trading, you should have actually bought your trades about the middle of the month. So we're coming up now towards the middle of the next month. So that's why options are going to start going again, trading. But I only do these videos if my couple of years of experience, well, a few years of experience in trading accounts, practice accounts, I saw trades double. This is going back about 10 years ago. But the stock market is what you make it. It can either be the biggest disaster ever, or the best thing that's ever happened to you. The person trading the stock market makes it what it is. And that's so like now, that's 10 minutes. So the stock market now is open, and my options trade will go from, it was about 136 grand, and it will go now. I'll probably put a video up in the next 10-15 minutes, let you know how, if it's gapped up or gapped down. When I've just checked the FTSE in there, and like now, I'll check the Dow Jones into Google. Just type Dow Jones into Google, and Google give you Google give you Dow Jones price last 10 minutes or so. And then you compare the FTSE and this is just how I do it. Everyone else does it differently. And I go long. You'll see for day traders, because they've got to make money that day. If you're a day trader, you want to buy the stock that day and make money that day. So you want to buy and close. You're buying the trade that day and you're selling the trade that day, and hopefully you've made money, or a series of trades that day. Whereas for me, I haven't got to make money today. I've got 30 days to make money. So it can go like this for 20 days. I don't care. As long as at some point during the month it goes and that wherever it finishes is higher than when I bought it, which gives me a profit. Divide that by the amount of days I was in the trade, gives me a daily profit in it, without having to do the daily trades. But that's just the way I see it. That's just me. But everyone trades differently. But I could care less what the stock market does. I just know that basically, as a rule, and you can look like Warren Buffett. He's got many videos where he just talks about the stock market. Openly talks about how he invests. One of the richest people in the world. But this is like long-term investing, but I just long-term for the 30 days instead of I could do make a profit in 3 minutes easy, but I prefer just easy. Why put pressure on yourself to try and make the profit that day? It's only because they panic overnight